for more on that latest data and what it means for China's economy, my colleague Rochelle Akufo spoke with Dan McClory. He's director of China Boustead Securities, and she began by asking about what led to the decline in June's service activities.
I think we have to consider the base that the comparison with PMI is coming from. Remember, in the first quarter, there was a lot of activity still related to the manufacturing and the export of medical-related equipment, work-at-home electronics devices. And remember, that's tapering off a little bit. But clearly, some of the COVID lockdowns that have taken place that relate directly to shipping products out, especially in Shenzhen, in the port area, that's about 25% of the export volume to the US. So that also has a ripple effect. So there's been some fits and starts, we might say, that have led to those statistics that we're seeing right now. So it will be overall a lumpy year. It will have some of those ups and downs.
So then some people are saying that perhaps China's economic recovery momentum has peaked. Would you agree with that?
Well, I think what has peaked are those areas that I mentioned before, which are things, COVID bounce related manufacturing stimulus. So the world reacting to China coming back as a manufacturer and needing certain urgent, important goods. So I think we've seen a peak in that. However, we still haven't seen recovery due to global factors in other important manufacturing industries, most importantly, automotive in China. You know, the semiconductor shortage has just hit everyone, everywhere. So I think, again, that's going to be part of this lumpiness. And when that part of the supply chain straightens itself out, I think you are going to see an increase. That again, automotive, along with mobile phones, were two big areas coming out of the pandemic for China and for GDP growth. And both of those are impacted by the semiconductor shortage.
So then obviously we know that a lot of countries are looking to the recovery in the US and China to really help give momentum to the global economic recovery as well. Talk about sort of any of the slowdowns that you're seeing in terms of the impact that might have domestically in China as well as internationally, the sort of domino effect.
Right. Well, you know, luxury goods are talked about a lot because China, largest consumer of those goods. And there was an immediate post-pandemic bounce in China. Travel, you know, was not an option, international travel. And so those goods were being consumed domestically. But if we look at certain sectors, we have to keep some things in mind, Rochelle. First of all, China did not have a consumer level stimulus like the US did, which brought out and continues to bring out a lot of spending here in the US. So China's was very non-interventionist, very muted in terms of any of that kind of support. So really what we're seeing in China for spending is savings that are now finally, because the feeling of being beyond the pandemic is starting to take root in China, people are feeling a little bit safer, a little bit less conservative that they're going to spend. But if I looked at industries, I would come back to the same ones, and you know, services have also been impacted in China. That's, again, mainly related to some of these lockdowns because of virus variants, and also, you know, just the ability to immediately contain the strategy that China has taken to immediately contain it wherever it asserts itself, and that has caused disruptions.
And as we speak of disruptions, you mentioned some of this impact. Obviously, we're seeing the Delta variant pop up in pockets in China, and we're seeing that impact on manufacturing and export hubs. What happens in terms of the domino effect of those sorts of disruptions?
Well, let's talk about what's being done to solve for that. And there were some impressive statistics that recently came out. You know, through May, China, I will say, had only vaccinated 660 million people. It more than doubled through June. It's over 1 billion too. And right now the outlook for vaccinations by year end is 70% of the population is vaccinated. So how do we even out the lumpiness? How do we take out the ups and downs? I think it's getting to some form of herd immunity, and certainly that 70% vaccination rate by year end. I mean, that's ultimately how this is going to be addressed. Otherwise, we're going to be subject to stoppages in China because of policy, and this is how COVID is to be eradicated. It's just to bring things to individualized lockdowns wherever necessary.
So as we look at some of this lumpiness in the recovery, then what are investors keeping an eye on in China?
Well, you've actually started to see some increase in inbound investment. And what investors talk about, and I'm talking about foreign direct investment, they've been talking about the China plus one strategy, which is let's keep investing in China. Let's have major supply chains there, but let's plus one it to maybe some other areas within Southeast Asia. But make no mistake, China remains incredibly important to manufacturers from around the world. So you're going to see now that China has come out of COVID, you're going to see now some continued, somewhat conservative, but where it came from a base of zero, complete stoppage of inward investment, literally, you're now going to see that happen. And, we have all kinds of examples from Elon Musk and Tesla to other more modest ones that don't capture all of the consumer's attention. But I think you're now going to start to see a return to foreign investment and support in China and China plus one manufacturing.